Hello guys, welcome back to a new video and to a new trade recap. So I'm going to share with you a trade that I took today, the breakdown of it from higher time frame to the lower time frame, and this was based on the 930 model that I shared on this channel. One of the easiest models there is. It's highly mechanical. Of course, there is a certain degree of discretion, but it has few moving parts, obvious moving parts, and the core concept of it is extremely simple, which is around 930 you want to see a sweep on liquidity and signs of reversal after taking that liquidity, and you want to enter at that reversal, not after 15 minutes or after 20 minutes from the open, but at that exact volatility, that strong move that happens around 930. All right, so let me show you the trade that I took and then the breakdown of that trade. So here's the trade. This is the 1 minute. I took it from here. You can see I entered at that violent move at 930. All right, not waiting for the volatility to pass or something. So in order for you to participate in that, you need to start trading market orders or buy stops or sell stops. Limit orders you won't get filled most of the time. Price will not give you that. All right, so I took a buy stop from here, stop loss around here, and the TP was here. This happens almost every day. All right, so let's go to higher time frame to lower time frame, and this way you can understand and anticipate where that sweep or that manipulation below a swing low or above a swing high will likely play out. So when you go and look at the higher time frame and understand the context, you can actually anticipate how that 930 sweep will happen. All right, so you will have higher conviction in taking that trade instead of just blindly looking at it and chasing every sweep at 930, because sometimes we will have two opposing sweeps, and using the higher time frame you can know which one is fake and which one is the real one. All right, so if you go to the higher time frame, for example the 4 hour, first of all we had this big move to the downside, all right, during London session. So what happens when we leave gaps and imbalances in a violent move or displacement like this? We always, 95% of the time, we tend to retrace and balance everything. I spoke a lot about this. All right, it happens all the time. We have this displacement balancing that those gaps right here. We have one here balancing that gap, balancing those imbalances. All right, not fully but partially, but that's all we need. Right, same thing here, 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 you can see here. So that's a pattern that you want to pay attention to. So not just a move to the upside, but a displacement leaving imbalances. All right, that's the difference. So when you start building the trade idea before 930, this way you can anticipate how it will plays out. All right, so we traded to here. All right, so we had this displacement, and now look what happened. We traded below that low and we have rejection. Now this rejection, we don't know if it's gonna be something like this or just here. All right, price every time it takes a low or a high, it will give a certain rejection, but whether it is this one or just a small one, we don't know. But since we have this big displacement to the downside leaving all those imbalances, we can anticipate that the rejection from this low can be decent to the upside. All right, and not just a small one and we can get caught in the longs and then price reverses on us. So we actually have a reason to reject to the upside. Let's go to the 1 hour. All right, See that big imbalance, right? Price traded all the way to it and balance everything, right? And just like we left this imbalance right here, eventually we're gonna go down and balance everything. So this is what happens at 9:30. This is 8 a.m. and this is the 9 a.m. candle. Let's go to the 1 minute or the 3 to see that sweep that we are talking about, all right? So look at this. This is 9:54. Price pulled back to here. Now at 9:30 we have that manipulation to the downside, right? Now if this is happening without this line right here, so price didn't take this higher time frame swing low, right? This one right here, then I wouldn't consider this a high probability 9:30 sweep. This one alone with this bearish momentum is not enough to push price to the upside. But since we have that sweep on that hourly or 4-hour low, now that can offer a rejection, all right? So again, without this one, it wouldn't be valid for me. I'm not gonna go with the, just because the sweep happened at 9:30, it doesn't mean that I'm gonna go against this trend. This is why I said it has that low degree of discretion, maybe 5%, to understand that you can't just take any sweep at 9:30. All right, so we have this double sweep, most importantly this one right here, and see the rejection that happened from here. Now this rejection, all right, coupled with the 9:30, all right, so even without the 9:30 volatility, we will see violent rejections from higher time frame swing lows and swing highs. But pairing that with 9:30, it will be a high probability move to the upside, all right? So as I said, now all you have to do is to find that point where price, or that violation point, all right? So for example, price was bearish from here, right? It can easily hit this zone right here and then continue lower. But if we violate this, now we have a bigger probability that we're gonna go to the upside, all right? Not 100%, but better. So you want to find that level where if price takes it, it's likely to continue. So this is where I put my entry from here. It was a buy stop, so I entered on this candle right here. Stop loss from here. Again, this is the 9:30 volatility. We take a low, right? Higher time frame low. We have this strong rejection. Then I'm not really interested in something like this. All right, doesn't make sense. So price going all the way to this low, it's not something that you want to stay in. All right. So what to target? The lows from here, all right? So these smooth edges right here, that was the TP, and see how price when traded to it, we have another rejection to the downside. Can you see that? There was another opportunity to short from here after seeing those rejections from here. There was an opportunity to short with this displacement. I wanted to enter from here, right? Again, big displacement, leaving tons of imbalances. Then I'm expecting price to come back to it, right? Balance at least half of these imbalances, and that would be my entry to go to the downside. But price didn't give me that. All right, short pullback and then traded to the downside. This was a good short, but I didn't get it. Eventually price traded to those imbalances, but this one was around 1.7 hours, so it was more than enough for the day, and this was a 9:30 trade for the day. And the backtesting process of this model is extremely easy, because all you have to do is to go to 9:30, see what happens there. All right, it's going to take you around 1 minute to 2 minutes per trade per day. All right, if you're trying to find a trade every single day at 9:30, in your backtesting environment, you can easily collect 100 trades in just one single day of backtesting. It's that easy, all right? You're doing your analysis at 9:30 only. If there's nothing happen, you skip to the next day. All right, so I encourage you to gather some data on it, try to refine it, test some properties, confluences, TPs and stop loss placements, and other tools if you want. So I hope you like this video. If you have any other questions, you can always DM me on my Twitter account or leave a comment down below and I'll answer you as soon as I can. Now happy trading and good luck.